Hey guys, what's up? Alec back with the Daily Stock Market, and today we have two exciting showdowns from two different sectors for the high dividend yield. And today we're going to be talking about telecommunications, and we're also going to be talking about the retail sector. And first up, we have telecommunications, and you guessed it, we're going to be going over AT&T versus Verizon. AT&T has an 8% dividend yield, Verizon with a 4% dividend. And then we're going to finish it up with Nordstrom versus Tapestry, which are two retail stocks with 4% dividend yield, and they've been on absolute fire the last 3 months. Some of them gained over 100 and 150% on Nordstrom and Tapestry. So if you do want to see who is the king of high dividend stocks for retail and telecommunications, make sure you stick throughout this entire video. And in my opinion, when you're going to be investing into a high dividend stock, not only the dividend is the important part, but also the share price to make sure that is consistently growing also year over year and not just your high dividend yield. And keep in mind, this channel is not like a TikTok or those TikTokers who make 15-second videos and don't go into their explanation of reasons why. So if you want to see detailed video, mine are typically 15 to 20 minutes so you can see exactly where I'm coming from and we can do a deep dive together and we go into detail every time. And I put a great amount of effort into these videos, so if you can smash the thumbs up button before the video even starts, that'll be greatly appreciated. And I appreciate every single one of you guys that come back every single day for a new video. That's why I continue to do it every day. If you keep liking these videos, and I'll continue to keep bringing the value-packed video for you guys. And also, if you have any questions about anything, I answer any questions left in the comments of the video in the first 12 hours of uploading. So make sure you leave your comments on the newest videos and I'll answer them right away for you. Let's get a conversation going in the comments. I want to hear what you guys are investing in and also what you guys want to see in more upcoming videos.
Hey guys, so for the first part of this video, we're going to be comparing AT&T and Verizon. So I have them both pulled up on the screen here. Verizon we have pulled up, and let's go over AT&T first. So it looks like in the last week they are up 1%. In the last month they're about flat. In the last 3 months they're up 6%. And the last year they haven't recovered from the pandemic. So they're down to $26 and they're at $29. So they are still fairly a good buy right now. So remember, their all-time high was about $43 and right now they're at about $29. Verizon, on the other hand, if we look at them, they're down 4% in the last month and they're down 1% in the last 3 months. But if you look at the last year, they haven't had such a hard time recovering from the pandemic like AT&T had. They are back to their January highs in 2020, and they're close to new all-time highs too. So you see December 4th was one of their new all-time highs. And just looking off the graph so far and basing it off the chart, it looks like this is going to be a better swing trade because it has that up and down roller coaster momentum that we really like. All right, so the first thing we're going to look at is actually going to be the stats right here. So we can see their market cap is $203 billion and their 52-week low is 26. So they're actually very close to a 52-week low, which is something I like in the big companies. Now we'll also see the price to earnings ratio is 19, which is pretty good in the market we're currently in right now. And they have about 250,000 employees. Now the good thing about them is they have a dividend yield of 7.1, and that's what this video is about. So it's going to be a good decision maker on who comes out on top. Now if we go over here to Verizon and we look at some of the stats, market cap is $230 billion. So basically the same market cap. Verizon is actually a little bit bigger. The 52-week low is 48, so they aren't as close to that 52-week low, but they're still right in the middle of the 52-week low and the 52-week high. So the good thing is they don't fluctuate too much on this company, but it's definitely a company you want to buy closer to the 52-week low, Verizon and AT&T. Now the price to earnings on Verizon is only 12, which is actually implying that it's a better deal than AT&T for the price it's currently sitting at. You'll also see, even though AT&T has a smaller market cap, it has almost twice as much employees. Not exactly twice as much employees, but it has about 100,000 more employees, AT&T. Now we know that this video is about dividend yield, and look at this dividend yield. It is about half, almost half of what AT&T is. So it only has a 4% dividend yield, which is 4% per year. So if you put in $100 and you hold it into Verizon for a year, you're going to be getting paid $4.30. Now the volume, the amount of people trading is about 9 million, and AT&T is double the volume. So a lot more people are trading the stock. So overall, I think AT&T you're going to want to be buying. So overall, if you can buy AT&T at 28 or 27, I think it would be better. And I'd love to pick up some Verizon right around about $50 a share for some dividend growth. But let's jump into their financials after this so we can actually see who has a better balance sheet and income statement, which is very important. And then we'll hop over to retail after that. Okay, so now we have AT&T's financials pulled up here. And if we look at their EPS, we'll actually see that they have been losing a little bit in 2020. So if we look at their income statement, what you'll see in 2015, they had a year-over-year growth of 103%. And then going into 2016, they fell flat. Going into 2017, they lost a lot of their net income, about 28%. So I would definitely look into what happened in 2017. But look what happened in 2018. They had a year-over-year growth of 100% on the bottom line on net income, which is absolutely amazing. They had about 20 billion that year in net income. In 2019, the net income fell about 22% again to 14 billion, which is still not bad. Now, what I really like about Verizon is their balance sheet. As you see in 2019, their total assets were 551 billion and their total liabilities were only 349 billion. So they have 200 billion more assets than they do liabilities, which is a great thing. But you have seen in the last 4 years, they have been growing their liabilities by a considerable amount. Now, if we click into their balance sheet so we can actually read a little bit more about it, and we press quarterly so we can see the more recent updates, 9.7 billion in cash and cash equivalents, which is a great thing. And in 2020, they are holding strong with that 538 billion in total assets in Q3 2020. So that's a great thing. They are holding strong. So overall, AT&T has a great balance sheet with almost 200 million more assets than liabilities. They have a pretty good bottom line. In 2018 and 2019, it was 14 billion. And we'll look in a second on 2020 on what their net income was. But if we look at their total revenues, they've been growing by a little bit. In 2016, they grew 11%. They lost 2%. Then they went up 6% and 6% again. So it's not like they're a huge revenue monster or anything like that. That's why you don't see their share prices flying crazy up. And if we check out Q3 2020, what you'll see just in that one quarter, they had 42 billion in total revenue, which is absolutely awesome. And they've had 40 billion every single quarter in 2020 as well. And if we look at their net income, in Q3, they raised it all the way up to 3.1 billion. Now in Q1 of 2020, it was almost 5 billion and then fell all the way to 1.5. Okay, so now if we pull up Verizon, which we have Verizon here, you'll actually see their net income year over year is pretty much the same as. So here we have AT&T. So you can actually see how similar these two charts are from each other. AT&T, I would say their net income's a little bit better. 2019, Verizon had a net income of 20 billion. In 2019, AT&T had a net income of 14 billion. So Verizon did win in 2019. The total revenue is basically the same too. In 2019, Verizon had 131 billion. And if you go to total revenue, AT&T had 181 billion. Now, if we go to the balance sheet and click on here, and we actually, this is Verizon, by the way, so you'll see ticker symbol VZ. Now, if we go down to total assets, they have only 290 billion in assets. But if you go to the total liabilities, they actually have 228 total liabilities. So their total assets versus total liabilities basically line up. So overall, I'm going to be giving the crown on this one to AT&T because the net income, the revenue is very similar, but the balance sheet, in my opinion, is going to be a lot better when you look at AT&T. Now, Verizon knows how to grow the bottom line a little bit better because their total income was 19 billion. Their total revenue was 131 billion. Remember, AT&T had like 150 billion in total revenue, but their net income was like $5 billion less than Verizon. Overall, these are things to consider, but AT&T has a way bigger dividend yield. So I would try to load up on AT&T as close to the 52-week low as possible. So as low as $26 a share, I would try to be buying in at. AT&T, it's pretty close right now. It only has to lose a little bit more steam, and I think it can ride up to new 52-week highs. So overall, AT&T, I do like better than Verizon because the balance sheet Their income statements are almost the same on their total revenue and net income. The balance sheet on AT&T is going to be a little bit better. And if you want to update on how AT&T is doing in 2020 on their income statement, total revenue, remember, $42 billion, and their net income is $3 billion. Verizon, total revenue is $31 billion, so it's less. But if you go to their net income, look at that, it's $4 billion. So their net income is more and their revenue is less. So Verizon does know how to grow that bottom line a little bit better for the net income. So if it's important for you to have a very profitable company and a good PE ratio, you might want to do a little bit more looking into Verizon, even though the dividend, and that's what this video about, is high dividend, is about half of what AT&T's dividend is. Okay guys, so that brings us right into our second matchup, which is going to be JWN Nordstrom versus TPR Tapestry. Tapestry, if you guys don't know, is like Kate Spade, Coach purses. Now, if we look at Nordstrom, they have been on an absolute heater. As you guys know, I made a lot of money off Nordstrom, and they were one that we've been calling for a long time. Ever since $13 a share, we've been a big advocator on them, saying to buy, buy, buy. So a lot of our students and people even who watch the free videos are up over 175% just from buying Nordstrom. Now, with that being said, we are going to be comparing them to Tapestry, which is a market cap of $9.4 billion. Now, if you look at my older videos too, we were recommending Tapestry for a long time, right around $15, $16 a share. And I took profits on TPR and JWN. If you look down here, you can actually see my history with these companies. Here you'll actually see I bought $185 at $12 a share for my Tapestry. And for JWN, if you want to scroll down and look at that too, what you'll see is that a long time ago, we've been buying at $15, $16, $14, $16 a share. We've been running contracts and options, $13 a share. And then we started taking profits right at around $20 a share. We took a lot of profits. So you can actually see how much I've been selling. We had a lot of Nordstrom. And if you watch my Webull videos, you can see how much in Nordstrom I still own. Now, I also have some of my Fidelity account, but if we start comparing them against each other, we look at their stats first, and the market cap is $5.8 billion on JWN, and on Tapestry, remember, it's $9.4 billion. Now, if we look at the employees, remember, JWN is a lot bigger on employees, 68,000, where Tapestry only has 17,000. Now, the dividend is what everyone else wants to know about. That's what this video is titled, and it's 4% on JWN, and it's 4% on Tapestry. So they're absolutely even on that one. And the 52-week high is 35 on Tapestry, so it's basically at the 52-week high. And if we go to JWN, the 52-week high is 41. So it's almost at the 52-week high also. So these are all things you have to consider and look at whenever you're comparing two stocks against each other and whenever you're considering about putting a lot of money into a stock. And by the way, they're also about even when it comes to volume too. Now let's go ahead and pull up Nordstrom and Tapestry's financials. Okay, so first up we have financials. And JWN is up first, and they were trading at about $3, and their EPS was right around $3, and it held there consistently, and then they went to negative $4. Now, if we pull up TPR, what you'll see is they were right around $2, $2.50, and they continue to hold right around that. So both their EPSs are pretty good. The next thing we have to look at is net income, and what you'll see is Nordstrom, JWN, the first one we have pulled up here, was $600 million, then it went all the way down and lost 41%, and then it gained 35%, gained another 16%, and then in 2020, as expected, it went down 11%. Now, if we look at TPR, their net income is about the same, but the difference is in 2020, they took a big hit on net income, and they lost $650 million compared to JWN in 2020. They made $496 million. So that's a good difference right off the gate you see for JWN. If we pull up their total revenue, you can see they were at $4.4 billion, and then they shot up 31% to $5.8, and then shot up another 3% all the way to $6 billion, and 4.9 in 2020. Now, if we pull up the revenue for JWN, you'll actually see the revenue for JWN is about twice as much as TPR. And remember, everything else is pretty equivalent. Their market cap, their EPS. So remember, JWN already has won on when it comes to net income. In 2020, they were positive, and now they're also winning when it comes to total revenue. So they're triple the revenue, and you don't want to just look at the amount, like triple the revenue. You also want to see what percentage they're growing by. So JWN hasn't really been growing as much. You see it's 4% gain, 2% gain, negative 2% gain. But if you look at TPR, they had a 31% gain. But then in 2020, which is the most recent to look at, they had a negative 17% loss in total revenue, which is a huge factor to look at because JWN only had a negative 2% loss. Now, the last thing we have to look at is going to be the balance sheet, and they have an 89% debt to assets ratio. So their liabilities is 8.7 and their total assets is 9.7. Overall, I would say TPR actually has a better balance sheet. Their debt to asset ratio is 71% instead of JWN's, which is 89%. So that's one great thing I like to look at. If you want to just do a balance sheet real quick, you can look at the debt to asset ratio, 71%. So in my opinion, TPR could be a safe bet because they have enough cash, they have enough assets to, if anything bad happens, they can pay off all their debt. And don't get me wrong, JWN doesn't have a horrible balance sheet, and it's not much of a difference. They're both pretty up there, the debt to asset ratio. I like to see it at like 25% or 15%. Pretty much anything under 45% for debt to asset ratio is going to be really good in my opinion. So overall, I do like JWN better this year because TPR, as we saw, their net income was negative. Their revenue was not well. Their revenue dropped almost $1 billion. Their liabilities went up almost $2 billion. If you look at their total liabilities year over year for TPR, and if we go to JWN, their liabilities went up $1.7 billion, but their assets also went up almost $2 billion there. They kept their revenue strong and they kept their net income pretty strong as well for 2020.
All right, guys, and I hope you like that high dividend stock analysis. I'm up over 37% in the last 3 months, and we have over hundreds of successful students now in our program. So if you do want to join me, let me know ASAP because I am shutting down signups for a little bit to get everything in order for next month. But when I do shut down signups, I start up a wait list. So DM me if you plan on getting on it in February. So I'm starting the wait list now. So if you want to make sure that you're one of the first person in February, let me know and I'll save a spot. Thanks again for all your support, guys. Make sure you share with a friend, leave a comment. I want to hear from you guys on this video and leave comments below on what you guys think are the best dividend stocks. This video is only about 4 dividend stocks, so I can make a full list of like 10 or 15 of the top ones. So let me know if you guys want to see that. And on some of the next videos, I was thinking about going by sector. So one of the next videos, I was thinking about maybe doing oil and comparing oil companies and seeing which oil companies have the best income statements and balance sheets. And then maybe the video after that, we'll do clean energy. So leave a thumbs up, comment below what you guys want to see from me and what dividend stocks are your absolute favorite. I'll see you guys in the next video. Until next time, remember, don't time the market, buy the market. Peace.